Good morning, good afternoon, and possibly good evening. I'm Alvin Taveras. I'm your host today at Build to Rent Network, and we're having a special home team edition. We're joined by both John and Tim, which are our local district managers here in Florida. And what we're going to do today is we're going to go over a couple of key articles that are important for the state and for the nation as a whole. And we're going to take turns speaking about the article and having a nice dialogue about it afterwards. Tim, I want to start with you. You are based out of Central Florida, and you have a lot of experience working with short-term rentals. So I want to first learn about your articles, and then we'll dive into it.
Thanks, Alvin. Yeah, I mean, before jumping in with Build to Rent, I did a lot on the luxury side and then the short-term rental side. Obviously, short-term rentals in Central Florida were the vacation capital of the galaxy. So, you know, we get a lot of great opportunities in short-term rentals, and a lot of those opportunities really peaked for acquisition and entry into the market, 3-4 years ago. And so we've kind of seen those prices steadily rising, and that kind of brings me to my article where Airbnb is really the leader in the space when you're looking at taking a temperature of how the short-term rental space is going. And I know for John and I, we look across all investment classes and all strategies for investment for our clients to make sure that they're well covered. And Airbnb had a great Q1. They reported their Q1 results earlier this week, and they had a really great. I mean, come on, $1.82 billion, 13% up on nights, and a 3% increase on average daily rate. I mean, that for any public company, for anyone who follows stocks, man, Starbucks is a little jealous of you right now because they're having one rough week. But Airbnb is reporting great right now. But I think the key part of this article for me that I took away was that less optimistic kind of forward-looking statement as they really dove into, we had a great Q1, but yellow light here, everyone. Q2's coming up, so don't come into this expecting the same rosy picture when we're talking again in 3 months. And a lot of those are macroeconomic uncertainties. You're seeing some changing consumer behaviors, continuous regulatory challenges in the space of STR. I mean, that's one of the big challenges for all the investors I work with in the space is, man, I really hope your local government doesn't change their tune on STR, because it really, you're really kind of powerless in that situation. So, I think it was a great article for Airbnb to really say, hey, let's pat ourselves on the back. We had a great quarter, but ultimately we've also got to look forward and say this market is challenging and it's volatile. And I think that's a larger piece for the whole industry of short-term rentals, investing in short-term rentals. If you go into that space versus like a new construction long-term rental, you gotta really strap in for some volatility, right?
Yeah, John, what are your thoughts?
Well, I guess recession and all that talk. People are going on vacation. People are renting places. They're using these Airbnbs. So there's something to do about that. I mean, we're moving, I guess, or people are just getting away.
Yeah.
Yeah. So it's funny when I read the article, I think that I see. So it's a quarterly review. So we're doing a diagnosis of the business strategy of Airbnb, and,
Right.
and I think a lot of times when people think about becoming a host, right, or investing in a short-term rental property, you have to often look at who your partners are in the deal and what's their incentives. And so when I read the article, I actually see that the incentives of Airbnb, the company, is wildly different than of the host. So for example, as a host, what you're trying to do is you're trying to increase your nightly rate. You're trying to increase your occupancy rate, right? Those are your key metrics you're trying to focus on. Airbnb's incentives are dramatically different. They're actually trying to increase the competitors in your space. They're trying to get more hosts signed up, right? And so I often think about what happened. You guys remember what happened with Subway when they were doing the $5 a foot long, right?
Yeah.
And there were a lot of people, and I was one of them. I was considering becoming a franchisor of Subway because I saw the growth. I thought we're all going health conscious. This is a new trend. We're all going in this direction. And then what you realize is that they were putting Subways everywhere. Right. so they were saturating the market, just placing Subways everywhere. And the key reason is Subways, what they do, their business model is they sell franchises. They get $500,000 a pop every time they sell someone on the idea of putting up a franchise. Once you are a franchisee, now you got to buy your meat and your bread and all your materials from Subway. So Subway's incentive is to flood the market with as many, Subway locations as possible, right? If you're the owner of a local Subway, you're annoyed that your competition is popping up all over the place. And I see the same thing here, where Airbnb cares more about adding hosts, which is your competition, and they're not as concerned with your profitability. And so when you're entering a space like this, you're looking at like, hey, what's their incentive? What's my perspective? How do I hedge against this? And a lot of what Airbnb is focused on is the host adding additional streams of income, but definitely not increasing your nightly rate. If anything, Airbnb wants to be cheaper as much as possible because now they're more competitive versus hotels and other industries. So you're competing against those large forces as well. And they want to have a lower nightly rate. So that's how I broke it down. I read the article as a misalignment between what most people think they're investing in, and unless you're buying the stock itself, investing in a short-term rental is completely different, right? It's not comparable as far as the performance of the company versus the performance of your rental.
It's funny, like 3 or 4 years ago when I was really diving deep into short-term rentals, representing, entry into the space, doing a lot of the business consulting to help people get their businesses set up, running a separate podcast specifically related to it. I was very bullish on the space. And right now I'm really advising people hold. If you want to get into STR right now, maybe consider investing in Expedia and Airbnb on the stock side versus getting into one of these homes right now that are so competitive. And now, those larger macro forces, in Central Florida specifically, man, you're competing against Disney. Disney's trying to fill their resorts. They're trying to fill their hotels. They're trying to fill their Disney Vacation Club. That's a beast to be competing against, as well as all of these micro businesses that are these small short-term rental owners that, own 1 to 3 properties. And then you have that mid-range where these property management companies who went in and acquired 10, 20, 30 short-term rentals, and they've got a little more data and analytical capability to do variable pricing. So there's so many layers here that right now, I've kind of shifted as you know, Alvin, because I'm here on this call with you, really shifted my focus on more of that new construction, long-term rental strategic approach to getting into real estate investment. And I think that's the winning strategy right now.
Yeah, and it's been, I look at it as far as how do you win and what's your competition. And so the way Airbnbs typically win is having more bedrooms, more baths, common areas that an entire larger family can get together, right? That's how you beat a hotel room. So instead of getting, if you have a baseball team, you would need, like 12 rooms in a hotel room to be able to fit a baseball team. With an Airbnb, you can just get one, 12 bedroom home, and now everyone can go ahead and share that same place, right? Same as a large family on vacations, et cetera.
For sure.
So what ends up happening is you often, if you're trying to get as many beds into a space as possible, as many baths, et cetera, is now you're going to pay a premium to have more square foot, more bedrooms, et cetera. And so one of the big challenges with short-term rentals is the ability to then adjust and have another use for that property. When you get a 5-bedroom home, it's hard for those numbers to work as a long-term rental. Right. And if your market's saturated with similar types of properties, it's hard to then get the biggest bang for your buck, especially when you're buying something ultra premium that's very expensive. It becomes very challenging. And so the exit is the other difficulty, where you're figuring out how do I time this? How do I get out? How do I adjust? And it's naturally going to be a very manual, hands-on experience the whole way through.
Yeah.
And for me, the concept.
Sorry.
Yep. The concept of the short-term rental versus the, say, hotel is, if I want to truly have a home experience, have a kitchen, have a washer and dryer like a house, that's where I would go towards the short-term rental versus hotel, where all you have is a bed and a bathroom basically. I in places that I've gone and vacations that I've gone where I really wanted to stay a few days and I wanted to, wash my clothes. I wanted to cook in my apartment. That's where I would go. Hey, nothing can beat a short-term rental for that. You just can't get that in a hotel. It's different. It's a totally different experience than you get in hotels. It's just
Yeah, and like Tim was mentioning, people are always they're competitive. So the big guys are also realizing this, and you
mm,
do now see a trend in hotels having more suite-like experiences, where they're more
mhm,
like home sites, where they do have kitchens, they do have laundry services, they do have washer and dryers. I was stayed at one the other day, which was part of a large condominium building that you could rent out for the night,
mhm.
and they provide all those services right there. So it is definitely becoming a more challenging industry. And so, kind of going from short term, looking at long term, I'm now going to talk to my article, which comes to the Florida Realtors Association, and they basically they're consistently looking at the rents throughout the state of Florida, tracking the trends, and so now we get a chance to catch up on what those trends are. And what we're seeing is across the board, we're seeing a slowdown in the increases of rent. So it doesn't mean that we're down across the state, but we're definitely seeing a decrease on the increase, right? So a couple years ago, we were at 22% rental rate increases, 20% rental rate increases. And a lot of those markets, they had a lot of, investors who were taking advantage of as much of a rental rate increase that they could. Now we're seeing that slow down. And it's slowing down for a number of different factors. Part of it is just now we're getting back to a normal economy. Uh, there's less movement overall going on. And we're seeing a reduction in inflation overall. So all those factors are going to contribute to just not being able to get as much rent of an increase as a result of that. So some of the areas that we saw a lot of the areas that had a big boom are now slowing down. And what's funny is that some of the areas that kind of didn't have a big boom, this is nationally, they're the ones getting the biggest increase. So some markets like New York and Chicago, people who, didn't experience that same bump that we did in Florida, they're now the places that are getting more expensive. So it may be something that we see we're taking turns for a little bit until we settle down. But just overall, we're still seeing an increase throughout the state. It's just not as high as it once was.
Everything has to kind of level off. You can't have, extremes. It eventually does, start to level off, and I think that's probably what's happened.
Yeah, anyone who built a business model on just in perpetuity increases of 22% on rent should be kind of slapped on the side of the head. But
Yeah,
that's
not
my
realistic.
opinion. That's my humble opinion. But
Yeah.
yeah, I mean, it is a regional adjustment period we're entering into, and I think that's kind of natural for the market.
Yeah, so get this. So Syracuse, as an example, is up 9% rent increases. Areas in Springfield, Massachusetts, is up 7%. You have areas like Akron, Ohio, which none of us would think would be like a hotbed for activity, is now seeing 7% rental rate increase. And what we're saying is that certain markets that were kind of like flat, didn't see much activity, they're now catching up, right? So it's funny because everything's gonna eventually level off, but you have to think about what's gonna happen in the long run.
Right.
So in the long run, right now, Akron's is at 7.4% rental rate increase. Does that mean it's a great place to invest in? Well, it depends on what your long-term objectives are. But we also can't be short-sighted and say, hey, because of this thing at this moment of time, because Florida isn't as hot as it was 2 years ago, doesn't mean that we're not going to sustain being hotter than Akron, right? For Akron, Ohio.
Right.
I think that's the key takeaway for me.
Well, also, the cost of living in, we get we get inflation on a national level, and we get a sort of a national idea of cost of living, but states obviously all differ, and in some of these states, the cost of living have increased, and inflation might be higher in those places. So obviously, there has to be an adjustment of those rents to make sense. I mean, to make it all balance out. And that's why maybe what we don't know is what the cost of living is and the inflation rates are in those particular states.
Yeah,
Yeah.
and right now I'm just reminding investors that this is a data point. Factor in this data point into your pro forma, factor it into your plan. It's I don't view this as a positive or a negative data point. This is just a data point that helps inform a more strategic entry into your investment. And this is easy to work with, but you have to have this information. You need to be having these channels of data to be able to add these insights to your larger business model.
Yeah, overall, I think it's a good thing. I think whenever you're increasing moderately something, that's better than being very volatile. So I think that increasing rent by 20% is unrealistic,
Yeah.
unsustainable, and would only lead to a really bad situation. I think a gradual leveling off and returning to normal is definitely a good thing. But I mean, let's not mistake it. A lot of people are in a situation where life is more expensive, right? Food, groceries, right? Cars,
Yep.
um, the rent. And so we want to make sure that their wages get a chance to catch up as well so that they can continue to raise their family and do what they have to do. So now with that, I do want to turn over to John's article where we're basically looking at the build to rent market as a whole and how it relates to the U.S. housing challenges. John, can you talk to us more about that article?
Sure, sure. The article is called Dawn of Built to Rent Homes Amid U.S. Housing Challenges. Obviously, the article talks about the housing market right now, the rise of home prices, the lack of supply, interest rates in the 7% range, the average monthly mortgage payments being around over $2,000. Basically, new homeowners needing to earn more than $100,000 to buy a home, an 80% increase versus like 4 years ago. So it's causing, millennials and Gen Zs especially turning to renting, due to affordability issues. Obviously talks about the new concept called build to rent, with emerging new purpose-built rental communities with amenities and property management. The build to rent concept basically has become like an alternative to traditional home buying. It basically fills a need for those looking for more space, or have a growing family, or want more privacy, or want just a house instead of an apartment. And nowadays, for what they pay in rent for an apartment, they can actually have a brand new home. The article goes on to say that build to rent is a concept that is just getting started. It has a potential to remain strong because of long term, growth. I mean, it's become something that is really here to stay in the Sunbelt states. Those states have rapid employment, they have strong population growth. So it is something that is going to really go long term. That's the basis of the article.
John, I love this article because I mean this is a lot of what I'm thinking about and talking about with first time home buyers right now who are struggling. When you think about the opportunity to take advantage of an owner occupied build to rent and get into a home, but then also kind of start a business. I mean, there's an opportunity here to really expand and take all of these challenges that are currently in the residential housing market and find, I'm a big blue ocean guy, right? So I want to find that space where, a home buyer can not only win, but like win and then some. And win being, okay, I can get into a home, I can buy a home, I can stop renting in an apartment, I can actually buy this home. But then also I'm buying 2 units. So I'm getting some cash flow in there and I'm kind of building up, a different strategy. I think this is a great opportunity to solve a problem that so many Americans are struggling with right now. On top of just, it's also a great investment vehicle if you're an experienced investor looking to expand your portfolio or start out in real estate investment. I mean, this is really that multifaceted approach to winning in real estate.
Yeah, it's filling a niche. It's filling a niche for definitely for people that just can't buy a home. I mean,
Right.
it's fantastic.
Yeah, so it's like 3 points all in one. It's what's the trend, what's industry doing, and as an individual investor, how do I play it? So if I know that millennials, they watched their parents lose their homes in the last housing crash. They're not as confident in the housing market as previous generations were. They also like a lot more experiences. They like moving around a lot more. They like
Right.
being mobile. They like being flexible. They also like being in a new space, right? And being where they can meet new friends and being with other like-minded people. It's a different framework than what previous generations have. They've also, I mean, they're about 10 years delayed as far as hitting major life milestones, getting married, having kids, right? Those types of major things that previous generations did in their 20s. Millennials are now doing in their 30s. And so they're just different. Those are the trends that are taking place. What is industry doing? Well, industry is realizing this trend. They're seeing that the migration's happening further south. They're seeing that they want to have more lifestyle choices, and they're building properties specifically for these types of populations, people who want to have this experience. So what do we do as an individual? Well, what we're seeing these big players take place is saying, well, how do I partake? How do I leverage a lot of the same benefits that these industry players are doing? And how do I look at that? Well, first we got to look at, hey, where are the areas where people are moving to? What type of housing are they looking for? And what role can I play in putting that together? So one of the things that Tim mentioned is saying, well, so if I have to live somewhere, if I'm ultimately going to pay someone's mortgage, I want us to be the investor, and I want to be the one that I buy into it myself, and I buy a property that has multiple other units inside of it. And then with that, if I decide to move, which being mobile is important to me, I can move out and have the rest of the house, the rest of the duplex, the rest of the quadplex be as a rental. So I can momentarily enjoy the property as an investment and then move out and profit and maybe even occasionally go back to that market once in a while. But it's definitely learning about what the trends are and how do you play it? Like what are your
Right.
options? And one of the key benefits that an individual investor has is leveraging. We actually can borrow money very cheaply with very little down payments. So a lot of investors can actually start with just 5% down, which is insane. There is no other hedge fund or other group that has that unique opportunity. These are all advantages that we have over the big guys.
And they can access that equity, right, Alvin? I mean, that's that other piece of like down the road, they can get in. You and I, we all always talk about like it's like a 75% discount to buy a home when you really think about that down payment that's required. But then as you build that equity, you actually have access to that equity. If you want to expand your investment, you can expand it.
Yeah, and if you no matter what source you look at, there is pretty much unanimous that we don't have enough housing, which is why housing
Right.
has gotten so expensive. And a lot of that led to after the '08 housing crash, all the builders went bankrupt. And so nothing was being built for a period of 5, 6 years. And we're just starting to catch up now. And what's happening with interest rates is it getting so expensive to build because of the construction loan that a lot of them are actually slowing down their permitting. We're actually starting to see permits slow down at the time period where the demand for housing is reaching an apex. So we
Right.
are increasing demand at the same time where the supply is less. So we may have a short period of time where things normalize and we start seeing, like we mentioned earlier, reduction in rents. We might go through a time period where the short-term rental market gets depreciated a little bit, but a year and a half, 2 years from now, when we see the lack of building play out over the course of 2 years and that demand continue to increase, and however you feel about it, we are seeing immigration uptick. People have to live somewhere. We're seeing our population grow in this time period, and we're not seeing housing keep up with it. So long term, this strategy is going to work out very, very well for those who invest at this time period where it may feel like it's not a clear that it's a good decision.
Yeah, long term, this is where this article, I mean, that's what I got, the message of this article. This is here to stay, and it's just starting. I mean, this is just the beginning of it. We are just at the beginning of this concept. And, it has a very bright future, according to the article.
Yeah, and I think there's a
So
path here also to kind of circle back to I mean, even the first article. I mean, this could be the start of something that does eventually bleed into STRs, that kind of model where, it's not townhomes or 10-bedroom homes. It's, these multifamily quadplexes, duplexes that are built out for these short-term rentals where, maybe that someone can live in one of the units, the owner can live in one of those units. But, I think this is a very exciting time to be diving into this space and really, putting the pedal to the metal on this space, because there's so many different ways that this can grow and expand into the future.
With that said, John and Tim, I do want to thank you for your time. We'll see you guys next time. Take care.